Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we have a topic which is statement of comprehensive income. We have an extract over here that has been taken of Colgate. There is consolidated statement of comprehensive income details that have been mentioned, the total comprehensive income including the non-controlling interest data. Well, we'll try and understand in this in a detailed format. We all know, about consolidated income statement and about the consolidated statement of comprehensive income. So what we note from the above, Colgate's reported a net income over here, 2586 million in 2016. However, the total comprehensive income, including the non-controlling interest, was 2344 million in 2016. So does this exactly help? So in this article or in this tutorial, you will know the consolidated statement of comprehensive income is and how it is useful to you as an investor. Well, we'll begin with the same. What is consolidated statement of comprehensive income? So to understand the consolidated statement of comprehensive income, the first we need to pay heed to opposite of comprehensive. So the opposite of the comprehensive income is narrowed down income or income from its what we call as main operations. The Colgate extract, this is a snapshot of the consolidated income statement of Colgate. This is a snapshot, and what we note over here that Colgate's net income, including the non-controlling interest, is 2586 as a part, as you can see over here, 2586 million. And we can see from the above income statement that contains revenue and expenditure related to the main operations of the business. So what about those items, that is the gains and losses that have been excluded from the income statement? Where do they get exactly adjusted? So let's understand this concept with the help of the basic statement of comprehensive income exam, a very basic one. Now over here, as you can see, the total assets is standing at 1300, right? The total assets and liability has to be equal, and it is standing at 1300. First, let's say the inventory write down is from 300 to $200. So if the value of the inventory decreases from $300 to $200, then the total assets amount in the balance sheet will also decrease by 1200. Right now, how does this total liability figures get adjusted? So the answer is quite simple: through the income statement, through the retained earnings. Right, so the inventory write down of 100, that is from 300 to 200, will follow from the income statement. Okay, so in this example, what we have assumed that the taxes is going to be 0, and the above case is for the gains and losses that flows from the income statement. So let's now take a different case where such gains or losses do not flow through the income statement. Now let's say the marketable securities that is available for sale, it decreases to 100. Now if the value of the available for sale, that is the marketable securities, if it reduces from 200 to 100, then the total assets amount in the balance sheet will also decrease to 1200. However, the total liability will be still at 1300. We are taking this as the benchmark for calculation over here, and the accounting rule does not allow us to adjust the unrealized loss on the available for sale securities from the income statement. Instead, they are adjusted directly into the shareholders equity section through accumulated other comprehensive income. There would be two takeaways over here. First, the gains and losses on such items are not allowed to flow from the income statement and are included in the statement of the comprehensive income, and the other comprehensive income for the period gets added to the accumulated income in the shareholders equity section. Now what's gonna be the format for the statement of comprehensive income? Well, comprehensive income, it connotes the detailed income statement where we also include income from the other sources along with income from the main function of the business. Let me show you something. This is how what it looks like when we saw at the very beginning level, right? So from this above, the consolidated statement of comprehensive income, we have to consider two primary components. First is the net income or loss from the income statement of the company, and other is the other comprehensive income, the other comprehensive income net of taxes. So here's the simple list of the items that is included in the statement of the comprehensive income. First is the translation adjustments. Now, the foreign currency translation gains or losses, they do not flow through the income statement. Therefore, they are included in the statement of the comprehensive income. So what we saw from there, the cumulative foreign exchange translation adjustment over here, adjustment attributable to the non-controlling interest, is 97 million. It is pre-tax, and 125 million net of taxes. Second, the pension funds, pension and the other benefits. So following the pension related gains or losses, they are included in the statement of the comprehensive income, like the pension post retirement benefit plans or gains or losses, or the pension or the post retirement benefit plans prior service, okay, prior service cost or credits, basically you can say that. Pension or post retirement plans transition assets or obligation. So in our scenario, when we saw the extract, we note in the Colgate that the retirement plan and the other retirement benefits adjustments were 168 million pre-tax. This was the amount pre-tax, and 109 million post-tax. Okay. Then there is available for sale securities. The available for the sale securities are the securities that are available for the sale, literally, and they have a readily available market price. So at the end of the each financial year, companies need to value available for sale security, and any gains or losses due to the change in the valuation is not included in the income statement, but are reflected in the statement of comprehensive income. The fourth is the cash flow hedges. Now, unrealized gains and losses from the cash flow hedges flow through the statement of comprehensive income. That is also part that is included in that particular thing. So, as a things that you should know as an investor, see, even after looking at the consolidated comprehensive income statement, there are few things that you should consider as an investor. First of all, you will know, no single document can tell you that whole thing about a company. So to be sure, you need to get your hands on the annual report of the company to the shareholders, and the annual report under 10K, and the consolidated income and comprehensive income statement. So if you appreciate the complexity and the technicalities of the finance, you will enjoy the detailed approach through thoroughly by looking at all the documents. But if you are just starting as an investor, it is better to learn from someone or the hire someone who can help you out with this particular state. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.